Hey, how you doing? Austin Hilton here, and in this video, I'm going to be talking about Churchill Capital. This is an update video related to them about some new piece of information that I've just found for you that actually does a really good job of explaining some of the share lockup periods related to the merger, as well as a few other little interesting pieces of information. I thought it was worth a video. That's why I brought it to you guys. I'm going to state up front that I am very bullish on this company long term, 2 years, 3 years out. We have yet to see, the first car come out. I think it's going to be an awesome vehicle. As you know, Churchill is going after the ultra luxury space. They are really not going to be competing with Tesla per se. I own Tesla. I'm very bullish on Tesla as well. What I like about what Churchill and Lucid are doing is they're going after this completely different space, this high-end ultra luxury market. So in that scenario, I do really like the stock, very bullish. And I think this stock is a $40, $50 stock, after execution, and we will see pullbacks in the stock. The stock gets hit with the kind of the overall EV scenario. When EVs pull back, the stock does as well. And there's just a lot of speculation right now, guys. Until the car comes out, and we see how that all goes, and we see deliveries, etc. It's just going to be kind of a volatile stock. It is, right? And so, I'm in it for the long haul. So let's go look at that here just in a minute. As always, this video is for entertainment purposes only, and if you get value out of this video, please do two things. Number one, drop a like on this video. The like actually really helps the video out, helps the channel out, helps me to grow, helps me to help more people, and that's really what I'm after. I'm after building a community here on YouTube, helping you guys make more money in the stock market. I'm a 30-plus year investor, and I have one goal, and that is to help you make more money by bringing you these update videos, giving you my opinion about these stocks. Excuse me. And I also I have a series of videos where I bring you growth stocks. These are stocks that are trending, hitting their 52-week high, and I tell you exactly how to invest in those. So if that's of interest, I also bring you penny stock videos as well. If those are of interest to you, subscribe to the channel, drop a like, and I think that's about it. Let's get started. Let's go see what I got for you for Churchill Capital. So you can see from the chart here that the stock market literally just opened about 3 minutes ago, and the stock's actually trending up really nicely today. It's up 3% as of right now. Not a lot of news out about this. There's not a lot of news right now per se, except for this one piece of article that I just found for you. There's other information, but you get my point. So we got a nice little bump. The Nasdaq's down about 32%. And 32 points. Man, no coffee, allergies, already a little off today. All right, and I got a lot of videos to record today. So I want to do something really quickly though. Show you. Let's look at 6 months. 6 month, we're still in that kind of downward cycle a little bit. I think right here we are really testing kind of our low. Our low seems to be this 1920. That's specifically to the heart of the article I'm bringing to you today. The news update I'm bringing to you today is really talking about the fact that at this current level, guys, at the 1993 $20 level, the stock is an amazing buy long term. If you believe in what this company's doing long term, 2 years, 1 year, 2, 3, 5, etc. I'm a fan. I'm a believer. I believe in the entire EV space, Tesla, etc. Okay, so what I want to do though is I do want to do this. I want to show you Churchill compared to say Tesla. Okay, you can see outside of the massive run up that Churchill had after they they came out. Look at overall the trend. The trend lines are somewhat in line with each other. Now you do see this trend line kind of overall in the EV space. Like these trend lines are very similar with Xpeng, NIO, Lee, and Churchill's kind of falling into that kind of similar category or similar scenario where the stocks kind of do follow each other a little bit. I always like to look at that, and they just seem to just follow each other fairly nicely. So this one's starting to develop a similar trend line to say Tesla. Xpeng is very similar. If you did the same thing, if you go to Google Finance and just added Xpeng, NIO, you'll see that the trend lines are very similar as well. Okay, so let's jump over and see what I've got for you today. So why Churchill Capital stock is a screaming buy. That's actually what got my attention, was the word screaming. Long-term investors focusing on the next 3 to 5 years and confident in Lucid's ability to execute are looking at bargain prices. I agree with that. The reason I'm bringing this to you is there was about 3 pieces of information in this that I found were extremely compelling, guys. So this is just a standard little piece of news. I thought this was an excellently written piece of news, and there's 2 or 3 pieces of really important information in this that I wanted to bring to you. Okay. So we all know this has been a brutal couple of months because investors have basically kind of been moving away from speculative growth and moving into favor of safer investments. We got potential of inflation down the road, etc. So some of the money has been moving out of growth stocks like Churchill and moving into safer investments. That's absolutely happened. The pullback is hitting the EV space. I own NIO, I own XPeng, all these other guys. I own Tesla. And the pullback is absolutely, as you guys know, if you're an investor in Churchill, it is absolutely hit the EV space. EV revolution remains in the early innings, and much of the expected growth is in the distant future. That is correct, right? I did a video. I talk about this in pretty much all the EV videos I do now. I did a video the other day about Tesla, and it was talking about in the United States that out of every 100 cars sold, only 2 of them are EV right now. And by the way, out of those 2, Tesla sells 80% of them. Okay, so it's actually 79% to be specific. But so my point of telling you that's not actually bad news. The last piece of information around that said that by 2025, out of every 100 cars sold, 10 of them will be EV. Okay, and so there is absolutely a massive room of opportunity here to grow. But we are in those beginning stages of EV, right? Especially here in the United States. I think some overseas, they're a little bit further down the road than us. They've really gone more faster, quicker into the overall EV scenario. And that actually leads me to this next piece of information right here. Look, President Biden came out with his infrastructure plan. He was talking about like 250 or $300 billion was going to go towards EV infrastructure and all that kind of stuff. And that basically it hit. Everybody got excited about it, and then kind of it wasn't really a lot of concrete details in it, and it's kind of faded away. So the turmoil has created, the overall turmoil has created buying opportunities for long-term investors in companies like Churchill, right? That's really what's happened. And at these prices, at this $19.95, $20 range, if you're looking at it from a long-term investment, it's a really, really good deal, which leads me into my next piece of information. This is what grabbed my attention, guys, right here. For the first time since confirming the merger in February, Churchill Capital shares dipped below 20 on Friday. We know, I just showed you what they're trading at. Now, I want you to remember the PIPE, private investment in public equity. Investors committed. So the PIPE investors committed to buying it at $15, an unprecedented arrangement due to the extenuating circumstances surrounding the deal following a month of rampant speculation. That was back when the deal was being done. At $20, listen to this. At $20, this is the closest that public investors have gotten so far to being able to invest in alongside institutional heavyweights like BlackRock and Fidelity. That was worth the video right there. That piece of information is why I'm making you this video, guys, right there. That is, I was like, wow, I didn't really know that. And now I do. I'm like, man, that is an impressive scenario. PIPE investors, listen to these, a lockup. PIPE investors also agreed to a lockup provision that prevents them from selling shares until September 1. Okay. See, the deal is expected to close during the second quarter. And as we enter the second half we know, of course we're going to be looking at air deliveries. Okay, here's another scenario right here. Okay, it's also worth remembering that SPAC sponsor has committed to an even longer lockup period of 18 months. Churchill Capital and its operating team, which notably includes former Ford CEO Alan Mulally, I hope I'm saying that name right, are committed as long-term investors that want to add as much value as possible by offering advice from its stable industry veterans. Those 2 pieces of information. Number 1, that the PIPE investors got in at 15. I knew that, but the dots had not connected, right? And that's why I brought you this piece of information. At $20, guys, we are in the same ballpark as PIPE investors. Oh, by the way, they have a lockup period. Now we know their lockup period September 1, and I just hadn't gone and looked at their lockup period, but that's what it is. So their lockup period is through September 1. And then some big heavyweights like CEO Alan Mulally, his lockup period is 18 months. And also, this is interesting. In fact, Lucid's decision to delay air deliveries from the spring to the second half was made based on feedback from Mulally, and the legendary auto exec's input will also be invaluable as Lucid ramps manufacturing operation. I thought that was impressive as well. I did not really know that it was via him that he was one of the major reasons that the deliveries were delayed. Guys, as an investor, I'd rather have the deliveries delayed and have them execute on this, right? That's really what we want. Okay. So generally speaking, companies within the same sector tend to trade in correlation with each other for better or for worse. I showed you that, how Churchill and Tesla and Xpeng, they all kind of tend to trade together. So it's true that many EV SPACs are incredibly speculative and some will inevitably fail. Like Nikola is having some problems, Canoe has had some issues. And so scenario here where I think that investor confidence has been shaken in the short term, but long-term investors can benefit from company-specific fears that contribute to a sector-wide sell-off but don't apply to other companies. I thought that was extremely relevant because what we have here, just like that, every time I go on video, my nose starts itching. What we have here is we've also had, I think, a very large sell-off from the scenarios that people were moving out of growth stocks, they're moving into safer investments. But we've also had scenarios where people have kind of been fearful of the EV space as well. We've also had that scenario where the stocks were ran up a little bit because of Biden's infrastructure deal. That's kind of quietly gone away. Not to say that deal's dead, but it's just kind of like it's been pulled back from the overall scenario and not really relevant right now. So we've had this sell-off. But here's the thing: it's very hard to invest when the stock is down, right? It is, and I think that's kind of human nature. And right now, if you believe in this company long term, it is time to buy if it's right for you. Remember, this video is for entertainment purposes only. If it's right for you, okay. So the decline has brought the stock's valuation back down meaningfully. There will be an estimated 1.6 billion shares outstanding after the deal closes, translating into applied market cap of $32 billion at $20 per share. That means that Churchill Capitals are trading at approximately 14.5 times 2022 estimated revenue of $2.2 billion, almost exactly Tesla's forward sales multiple right now. Okay, so investing in Churchill Capital and Lucid Motors for the long term should be about the EVs makers' execution over the next 3 to 5 years, not about near-term volatility over the next several months. I completely agree. Now, here's what's going to happen, though. We're going to have volatility. We're going to have pullbacks. This stock, it gets hit whenever NASDAQ pulls back, whenever there's any negative information related to the overall EV sector, this stock gets hit, just like Tesla, etc. It moves around. If that's not right, if that's not your cup of tea, then maybe it's not the right stock for you. It is speculative, and it is a long-term play. But at these levels, guys, at $20 a share, that's a bargain right now if you believe in their ability to execute and moving forward. Maybe take a small bullish position in it. I always say this, don't bet the kids' college fund, right? But take a small bullish position in it and just kind of put it away and move forward, right? And just let it sit there. Investors that have confidence in Lucid abilities to ramp manufacturing deliveries with revenue forecast to reach $10 billion in 2024 and $23 billion in 26 should be scooping up shares right now. Remember, I'll end on this note before we do final thoughts. Remember what I said to you, that by 2025, out of 100 cars sold in the United States, 10 of them will be EVs. Now, we all know that the bulk of those will be Palantir. Where did I get Palantir? Oh, I saw it on my screen. We all know that the bulk of those will be Tesla. That's fine because remember that Lucid and Churchill are going after the ultra luxury market, and so they're going after a much different part of the overall market. So let's wrap up with a few final thoughts. So in conclusion, I don't have a lot more for you. I think that you have to make the right choice for you, right? It has to be the right choice to either invest in or stay in this stock. I'm in for the long term. I think that this is a very, very good stock, good company. Is there unknowns about it? Absolutely. Is there speculation around it? Absolutely. Is there volatility around it? Absolutely. I don't have every bit of my investment dollars in this one company. I have investment in this company, but I've got investments in Tesla and Xpeng and things like that. So this is one that I'm in for the long haul, and I think that this is a very good one. Obviously, everything's got to fall into place. Execution, the car's got to be received well. It's got to be a good vehicle. I have confidence that they're building a very good vehicle, and I think that this is a good one if you're looking at it long term. And so with that said, hope you enjoyed the video, and I'll see you in the next ones down the road. Take care. Bye.